Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, March the 30th, and wow, the first quarter is almost coming to a close tomorrow, and wow, has it flown by, and has it been a very, very jam-packed and interesting quarter in the equity markets. But wanted to touch briefly on what markets did last week. Another encouraging week in the equity markets with the S&P 500 finishing the week up 1.39%. The mid-cap index was up 1.25%, and the small caps as measured by the S&P 600 were up 50 basis points or 0.5% on the week. And as we head into this week, we are getting some economic data, but it's a pretty light week because we're getting some corporate earnings starting really with the banks in about 2 weeks. So light on corporate earnings. So I really want to take a little bit of time and talk about the technical side of the market. So there's two types of analysis that industry professionals or you as an investor put in. There's fundamental analysis where you're looking at balance sheets, PE ratios, earnings, revenue growth, price per share, revenue per share, all of that, cash flow per share. You're looking at all of that information. That is fundamental analysis. But technical analysis is studying the movement of the market on a more macro scale. And in a micro scale, it's checking the movement of individual stocks and oscillating, and there's moving averages and there's support levels and things like that are in place. So at River Place, what we use for our technical analysis is we use money, we track money flows, and that is as the stock closes above its arithmetic mean for the day, then it has positive money flow. So even on a down day, you can still have more buyers than sellers. It's just if you had more selling pressure at the open and buying throughout the day, then you have positive money flows in your equities. And right now, as we speak, our technicals and our money flow analyst is telling us 90% of the stocks in the S&P 500 have positive money flows. The other encouraging thing about this market through the banking crisis is the support levels held up. In the technical side, we never broke through the 200-day moving average, which is on a technical scale a very bearish sign if you break through the 200-day moving average. And when I say break through that, what I mean is if you dip below that number. So if the stock's 200-day moving average or the market's 200 moving day average is 100 and you dip below that, that is a negative sign technically and can lead to additional selling pressure for that equity or the overall market itself. So what's positive is that the technicals have really held up here during a time of uncertainty, a lot of uncertainty with the banking sector and how all of that was going to play out and impact the overall economy of the United States. And we have held up, and not only have we held up, but we've rallied. But I also wanted to touch on this. What has really been working well is large cap tech, and it has become a pretty narrow market of what is actually producing very positive returns. It's large cap tech and communication services. That's what's working really in the S&P 500. That's what's powering all of your returns, and that's why the index is up around 5% as we're speaking today on Thursday the 30th. Year to date is being driven a lot by this. Now, when we were starting out this year, we were being led by small and mid-cap companies. They're not as liquid, they're more volatile, they're not going to have as much capitalization as some of these larger tech names that are almost seen as a flight to safety. So you saw investors sell off from all of these other various sectors and other size, market cap size. So you saw small and medium size mid cap companies take back all their gains for the year. Now they're working to move back positive year to date this week, but the reason why they're down more than the large caps are is it's a flight to safety. People want large balance sheets, very liquid companies that have a lot of cash and that can grow in slow economic times. And a lot of these large cap tech companies have proven to do that. as well as they were very beaten down last year, if you will remember. So if you have a diversified portfolio of a bunch of equities and you're not keeping up with the 500 so far to start this year, that's okay. The equal weight 500 is not keeping up either with the S&P 500 because it's being driven by these large cap tech and communication services stocks that's really moving the market higher. But the positive thing here is with these positive money flows, we really do see some upside potential here in the equity markets. Now, we at River Place, we are long-term investors. I just wanted to take a minute to talk about the technical side of the market if anyone was interested to see what was going on. At River Place, we're long-term investors, and what that means is we're looking at things to grow over the next 3 to 5 years. When you're looking at the technicals, remember that's day to day and 6 months out at the most on a time horizon. So as always, if you have questions about how to understand these technicals or how it's going to impact you, feel free to give me a call or give us a call. We'd love the opportunity to speak to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thank you so much.